The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magicbricks webinar, our endeavor to empower you with insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is demand for smaller units on the rise in North and East India. And our guest speaker today is E. Jayashree Kurup. She is Head Content and Research with Magicbricks. Jayashree is a business journalist with over 2 decades of experience in working with print, online and electronic mediums with the Times of India, the Economic Times and the Financial Express. She specializes in analyzing real estate data to come up with usable solution to users. She works with consumers to provide advice on using available information to make wise investment decisions. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Welcome to the Magicbricks PropIndex and HSI webinar. This is the second in the series. Last week, we had a pan-India webinar. Today, we're focusing on the North and the East. PropIndex is the India Apartment Index. It is a tool which provides detailed information on price movement, supply and user demand for multi-story apartments, single floors listed across cities. You can access it online at propindex.magicbricks.com. The PropIndex gives you a national property index, city property indices, listed price monitors, a rent monitor for each city, yield meters, top preferred localities, demand and supply analytics, locality price ranges, and an editorial speak which has been to which all our Times property editors in different editions have contributed. Let me quickly go to the national findings. The demand for 1 BHK units grew by 1 to 4% across India. Chennai was the one city that bucked the trend. There is more supply than demand in Chennai for 1 BHK units. 1 to 4% rise in demand across cities for residential houses. Till now, in the last 3 quarters, we saw that apartments were in high demand. This is the first time in the year that we've seen residential houses coming back in demand. There was a drop of 3 to 10% in supply of premium properties in the NCR. However, the premium properties are still oversupplied. There's less demand and more supply for premium properties. There is less supply and more demand for mid-range properties. Maximum rise in demand for properties worth rupees 30 to 50 lakh in the last 1 year. This is where there is a mismatch between demand and supply. There's more demand and less supply. Let's quickly go to the Delhi NCR city trends. The city index dropped by 9% in the last 3 quarters. Delhi continues to drop in the, the national index is anyway very stable or dropping in some cities. Delhi has recorded consistent drops over 3 quarters. The capital values have dropped in over 55% of tracked localities. So clearly the market is responding to the consumer's lack of a buy decision. There's a 1 to 10% drop in rental values in 50% of tracked localities. Delhi had been an overpriced market. It had outpriced itself and was becoming unaffordable. Today, it was a question of who will blink first. I think the consumer has won this small battle. It's the landlords who have dropped rental values. The gross rental returns are between 1.2 to 4%. Now, this is a function of the capital values that you spend to buy a house and the rental values that you get for that same house. Low-priced properties are yielding high rent to places like Govindpuri, Uttam Nagar and so on, where the property prices are low, are yielding good returns, whereas properties that are highly priced, for instance in Safdarjung Enclave, Vasant Vihar and so on, the rental returns are low. There's a rise of 4% in demand for 1 BHK units. The supply remains stable at 8%. Delhi has not really tried too hard to create more supply in the 1 BHK category. These are mostly in unauthorized colonies, resettlement colonies or in the urban villages of Delhi. There's no change in demand for 4 BHK and above category, and the category is oversupplied by 25% in South Delhi and 15% in West Delhi. Uttam Nagar, East, Mehrauli, Ghitorni and Narela noted maximum availability of properties worth up to 20 lakh. These are the low price properties, and these are the areas that are that have been exposed by the metro. When the metro started its run through the city, a lot of areas that were earlier not in demand have come into demand. Uttam Nagar, Mehrauli, Ghitorni and are all examples of this. Let's go to the Gurgaon index, a city index that has remained stable over 4 quarters. The markets have been slow and continue to be slow. Up to 5% drop in capital values in sectors along the Dwarka Expressway. Till the expressway work completes, the Dwarka Expressway is not expected to rise. It was one of the most active markets, but the consumers are waiting for some kind of action on how that expressway work gets concluded. There's maximum active supply in sectors 81 to 92, and there's a 1 to 4% rise in values. These are the sectors where DLF, Vatika and so on have started handing over possession. At most stock comes, these are premium, this is premium stock, and you can see that there is a rise in values as well. Sona Road and Golf Course Road, in the heart of the livable city, has remained the preferred destination for sale and rent. There's a 32% demand for rupees 60 lakh to 1 crore and 1 to 2 crore budget ranges. The supply almost matched demand. Not much new supply coming, and supply and demand have started matching each other. 9% drop in demand for properties worth rupees 2 crore and above. Clearly, the investor has exited the Gurgaon market. It is end users, and end users are smaller in number. Therefore, very premium properties, you see a drop in demand, a significant drop in demand. 40% demand for 2 BHK units, and the supply is only 21%. Gurgaon has been building in the 3 BHK category. The consumer preferences have changed significantly with the exit of the investors. End users are looking for 2 BHK units. There's a 41% demand for 3 BHK units, and the supply is 52%. This is the category where supply and demand are coming together. Noida and Greater Noida, in the last 15 months, Noida market remains stable with practically no change in the city index. There was a 1 to 7% drop in rental values in over 65% localities. This is clearly a case of more supply brings down rental values. Sectors 50 and 62, both near commercial areas, have remained the most preferred localities for rent. About 30% demand for properties worth 40 to 60 lakh and 60 lakh to 1 crore, and the supply was about 49%. Almost 50% demand for 2 BHK units, and the supply was 41%. Here too, though there is a huge amount of supply coming, there's more supply in the larger categories and less supply in the smaller categories. 1 BHK units recorded a rise of 2% in demand at 14%, but the supply is just 7%. Across the NCR, the consumers are looking for smaller properties, and the supply is more for larger properties. In Ghaziabad, there's no change in the city index. Indirapuram and Vaishali remain the most preferred residential areas. Lal Kuan, NH24 and DLF Ankur Vihar offered maximum options within the rupees 20 lakh category. Over 45% ready to move in options were available in Indirapuram, Vaishali, Vasundhara and Crossings Republic. But 43% of demand for properties in the budget of 40 to 70 lakh, but the supply was only at 33%. Over 50% demand for 2 BHK units, here the supply is 47%. 1 BHK units noted consistent rise in demand by 3 to 4% quarter on quarter, but the supply remains stable at 13%. Let's quickly move to the East region. In Kolkata, the city index rose by 2%. Kolkata's demand is all locally generated. There is not much commercial activity happening in Kolkata, and it is the intrinsic city demand that is servicing the city. Over 60% tracked localities in the city noted a rise in capital values. Over 80% localities in the city generated a gross yield of 3 to 4%. Values are low, rental values are stable, so you are seeing a rise in yield. Rajarhat, Garia and Newtown remain the most preferred residential destinations in the last 6 months. Properties worth 20 to 40 lakh were in maximum demand at 43%, while supply stood at 36%, the same story as in the rest of the country. Apartments continued to be oversupplied in the city, with supply leading demand by 9%. Kolkata behaves like since the demand is intrinsic to the city, it behaves like a small city where there is more demand for residential houses rather than apartments. However, most of the new developments have been apartments. Unless there is a large commercial development that takes place in Kolkata and fresh other city demand comes into the city, this demand pattern will continue. Demand for 1 BHK units rose by 3% and outstripped supply by 8%. So why is the PropIndex useful, and to whom is it useful? In the industry, real estate developers, it helps you understand buyer preferences, property types, size, configuration, budget and locality so that you can build where the demand is. Government offices and ministries of urban development, it helps you assess demand and supply gaps and where real estate policies have to be made. Construction organizations, it helps to forecast demand and supply at the region and locality levels. For consumers, this information helps to endorse your home buying decisions. You can understand your localities and cities better. It tells you the real estate trends and analyzes why those trends took place. It gives insights on the real estate price movement at the locality level quarter on quarter. It also tells you how to improve your financial status with the return on investment data. It indicates the top capital and gainer localities in the respective cities. So how do we compute the PropIndex? It is based on the listings of apartments and their capital and rental values on the website. Individual properties are aggregated into localities, weighted to city and then to the national index. The weightage is based on the supply of properties within the locality and the city. Magicbricks has over 700,000 active properties posted by more than 140,000 active users in 300 cities and 10,000 localities. This gives us a huge database which is then warehoused and analyzed to arrive at the PropIndex. We have 11 cities, 620 plus localities in the PropIndex. Delhi, Mumbai, Chennai, Kolkata and Bengaluru are the metros. Pune, Hyderabad, Ahmedabad, Noida, Greater Noida, Gurgaon and Ghaziabad are the tier 1 cities. Capital and rental values analyzed quarterly, the yield on investment, extensive user demand analytics, demand versus supply statistics, the top 10 preferred localities city-wise, home in your budget, and Times property editors who give their perspective on real estate markets time to time. Thank you, and over to you, Aradhana.
Thanks for the insight, Jayashree. I hand over the session to Uma. Uma, can you please take it forward?
Thank you, Aradhana. Thank you, Jayashree, for that interesting presentation. I'm Uma Sitaraman. I'm the lead researcher in charge of publishing the quarterly housing sentiment index, which is a joint venture with Magicbricks. So let me just tell you a little bit about the housing sentiment index. The reason we wanted to have a sentiment index in the markets is because the indices that are out there in the Indian markets reflect registered properties. So the house price index and the NHB's house price index, the RBI's index, all of them concentrate on putting out indexes that are focusing on what properties have actually been registered. There was nothing that was actually capturing the sentiments of home buyers. And we thought sentiments are very important. I mean, just like in stock markets, sentiments tell a lot. There's a lot that happens based on what people perceive and what people feel is going to happen. So we wanted to capture sentiment of the housing markets in the next 6 months. So what are people thinking, what do people think house prices are going to do in the next 6 months? We wanted to capture this in the form of an index. And that was the reason for coming up with this housing sentiment index. This is based on a diffusion index methodology which is used worldwide to capture sentiments and kind of quantify it. The index's value ranges from 0 to 200.
with 100 implying that buyers expect prices to be flat. So a 0 would mean that all people surveyed expect prices to come down. A 200 would mean all of the people surveyed expect prices to go up, and 100 is where like half of them say prices are going to go up, the other half thinks prices are going to go down. And so there's two things that you need to look for. One is actually what the index value is as of this quarter. That of course is important, but along with it you also need to look at how the index has changed from the previous quarter, because a lot of cases you see, like in this specific case, it looks like the sentiment is crashing, but if you put it in perspective with the previous quarters, then you get a better picture as to what's going on in the housing industry. We covered 10 major cities so far. So there's a buyer demographic that is covered. We also have a parallel seller index which captures what sellers think along with the buyers. And we also do a lot of micro market analysis for these 10 cities. So within the 10 cities, which are the areas that buyers prefer, that's also something that we analyze. Moving on to this, the highlights for this quarter. The aggregate buyer index actually crashed this time to 81. So from 114 to 81 is a steep drop this time. The seller index did a lot better. So sellers are still very bullish with the HSI at 154, and there was a very small drop from the last quarter. But if you look at it again, we're comparing it to previous 2 quarters, immediately after elections, that was in Q1, there was a huge jump in HSI across all the major cities. And the previous quarter we had a slight adjustment, and this quarter there was a major adjustment. So it looks like people are all, in general, they were waiting for reforms to happen. A lot of macroeconomic changes to work. They were happy with the stable government at the center, but now they realize that for things to really happen and for the housing markets to improve because of these macroeconomic conditions, it's going to take some time. And so expectations are kind of settling down as of now. Coming to the specific cities in the north and the east, Delhi's sentiment fell very sharply by 32% this quarter to 78. So if you look at the Delhi markets, the new launches have reduced significantly in the last few quarters, but still inventory continues to remain high, and job markets are pretty muted. There's nothing exciting going on in the job markets. So all of these put together are kind of working on the Delhi sentiments. Noida witnessed an 8% drop, which wasn't as bad as compared to Delhi, but still a drop because Noida has been significantly increasing up to the previous quarter. So again, very lethargic infrastructure developments and rising inventory are major reasons for Noida markets to kind of settle down in terms of sentiment at least. But with the HSI at 109, Noida is actually the #1 in terms of city with respect to sentiment this quarter. So it is still in positive territory, and it happens to be the city with the highest sentiment for this quarter. Gurgaon again witnessed a steep drop, a 25% drop, and its HSI is at 80 this quarter. 27% of Gurgaon respondents specifically are looking to buy property as an investment. Now this is a major reason for this drop in sentiment, because as you know, the Gurgaon markets are already pretty heated up, and prices are very high at this point. And as an investor, you wouldn't want to be investing in an overheated market when you probably know that prices will either correct or at least not give you any appreciation in the near term. So this is a major reason the Gurgaon sentiments are down. Calcutta witnessed a 19% drop in HSI to 103, but again still in positive territory. Again, Calcutta also you've seen new launches slowing down, and the growth is concentrated along the periphery of the city. Just to share with you the analytics that we work on with the data that's collected through the survey. So we get to know a lot of interesting patterns about how buyers think and where they would like to invest. If they are investors, how do they behave? If they are actually buying the home for their own use, how do they behave? It's a lot of interesting insights. Specifically looking at HSI by price range. So if you look at price range, what is it that people are looking at? 47% of respondents are looking for property below 40 lakhs. An average of 15% of respondents are looking for property below 20 lakhs, if you look at the average over the last 3 quarters. And 25% are looking for property between 40 to 60 lakhs. So there's a lot of demand for property that's priced below 40 lakhs. HSI for properties above rupees 1 crore decreased by 37%. So the HSI came down pretty drastically to 72, but it's only 8% of respondents who are even looking for property in this range. So clearly you see that we need to focus a lot on the properties that are somewhere below 40 lakhs. In Gurgaon specifically, 13% are looking for property above rupees 1 crore. Now this is the highest when you compare it by city. 13% is a very high number. So Gurgaon is definitely a high priced market. HSI for property in the 1 to 2 crore range for Gurgaon fell by 47%. There was a very steep drop this time. In Mumbai, 12% of respondents are looking for property above 1 crore. And again, HSI is at 75 for this population. At the other end of the spectrum, you have people in Calcutta where 35%, that's a huge number of respondents, are looking for property below rupees 20 lakhs. So that is kind of what you can call the affordable housing segment. So Calcutta, there's a huge number that's looking for property below 20 lakhs. And again, in Hyderabad, you have 21% looking for property below 20 lakhs. And obviously, these regional markets are very different. So Mumbai and Gurgaon, etc., are very high-priced markets where you don't get like huge properties, even if you are going to shell out 1 to 2 crores. Whereas there are other cities where you get decent properties for the same amount of money. And this tells a lot about cities, their demographics, and a lot of interesting insights as to how they behave also and when the macroeconomic conditions change. Moving on to the city-specific analytics and taking Delhi as the first example. 38% of respondents are from South Delhi, and this witnessed a 27% drop in HSI. Now, West Delhi comprises another 28% of respondents, and this witnessed a decrease of 37% in HSI. So there's an overall drop in HSI for Delhi. So all 4 regions are down this time, if you look at it, and pretty steeply down. Then 82% are end users, while the rest are looking to enter as an investor. In Delhi, HSI for those looking to buy for their own use is 23% higher than those looking to buy property as an investment. That was again an interesting insight. If people are looking to buy for their own use, they seem to be a lot more optimistic than if they are actually buying property as an investment. Flats and multi-story apartment is the most preferred property in Delhi, 63% of them preferring flats, followed by land. 31% of those who already live in their own house are looking to buy, while 46% of respondents currently live in rented accommodation. And the HSI for the rented ones who are currently living in rented accommodation is 85. And another 23% live with parents or relatives. So again, all HSI is, as you can see, way below 100 in all segments. So Delhi has taken a beating this quarter. Moving on to Noida. A new developing sector that makes up over 50% of respondents witnesses a 16% drop in HSI this time. 30 to 39-year-olds comprise 39% of the respondents, followed by 40 to 49-year-olds. So this is typically the home buying population in terms of age. 74% are end users, where the rest are looking to enter as an investor. Now again, there's a major investor market here. 78% prefer flats, followed by 13% who prefer land. 30% of those who already live in their own house are looking to buy. Now this we are assuming that this 30% is again going to either looking to buy as an investment or moving to a bigger location. 55% of respondents currently live in rented accommodation. Again, 55% living in rented accommodation is both well for the markets because these people probably want to move into their own location. So that's a good sign for the markets. 28% of buyers are looking at properties within 20 to 40 lakh range, and another 36% are looking for 40 to 60 lakh range. And in terms of profession, buyers working in IT and self-employed witnessed negative sentiment in Noida. Coming to Gurgaon, Sona Road, comprising 17% of respondents, witnessed a fall of 21% in HSI. And Gold Coast extension, which is a very steep drop of 65% this time. 27% of respondents plan to purchase property for investment purposes. Now this was what I was mentioning earlier. That's a huge percentage in Gurgaon, which is looking at buying property as an investment. 64% prefer flats, and again this is followed by an 18% who prefer land. Now, if you look at the land market, HSI has dropped very steeply by 58% this time. 25% of those who already live in their own house are looking to buy. Again, 58% live in rented accommodation. Now, this is a trend that's pretty consistent across all cities. Over 50% live in rented accommodation. Moving on to Calcutta, 52% of respondents are from South Calcutta, but 26% are from North Calcutta. HSI for those who are planning to buy property as an investment, that's again this 19% in Calcutta, and they are neutral, so it's considered a perfect 100. While HSI for those who plan to buy as a place of residence is slightly above 100 at 103. In Mumbai, in Calcutta, 72% prefer flats, and this is followed by 14% who prefer independent house. 36% of those who already live in their own house are looking to buy, and 44% of respondents currently live in rented accommodation. 20% live with parents or relatives. Again, the 20 to 40 lakh range comes in as the most popular range, with 39% falling into this range, and 17% fall into the next bracket of 40 to 60 lakhs. Now, properties below rupees 20 lakh comprise 35% of total respondents. This is the highest in terms of percentage among the cities surveyed. So there is high demand for the below 20 lakh properties within Calcutta. 11% of respondents in Calcutta belong to the IT sector, and another 17% are self-employed. In terms of sampling, we do a quarterly online survey across 10 cities along with Magicbricks. And there's a standard questionnaire that's mailed out. So the questions have been very carefully selected to cover preferences of the buyers, both in terms of demographics and micro markets. And respondents assess the relative market conditions. So we get to know the respondents' opinion on what they think prices are going to be in the next 6 months. So in the next 6 months, do you think prices are going to increase, decrease, or stay the same? So this is a standard question that's asked, and the answer to this question helps us kind of calculate what people think and put out the index, which kind of summarizes by city what buyers opine. And we have noticed another thing: seller indexes are always a lot more bullish than the buyer indexes, and this again is not a very surprising result. And again, there's a big population that wants to sell within 1 year, within 3 years. So there is again a huge investment market. People who are investing money in land only to see quick returns. And this is another reason, maybe one of the reasons why the sentiment has fallen this time, because the investors are not going to be too attracted at this point of time. You have your stock markets performing really well, so people are probably of the opinion that stock markets might give more returns, and real estate is a lot more riskier and a lot more illiquid to actually transact too quickly, especially in overheated cities like, so specifically Gurgaon, Mumbai, Delhi, etc., where prices have, Gurgaon especially, where prices have really run up in the last 1-2 years. Investors are going to be very wary about putting in their money into real estate at this point. If you are, of course, a buyer who wants to buy for your own purposes, that's a totally different ball game. If you will probably want to anyways buy, irrespective of what market conditions are, and you might wait, a couple of months to see if your macroeconomic conditions change. But you should anyway put in your money if you really want to purchase a house. And interest rates have started to move downwards. There was a 25 basis point cut recently in interest rates, which is again a good step, and which will probably incentivize buyers. Not a big cut, but at least it's a step in the right direction. So hopefully buyers will start investing in real estate. This is a summary of the HSI for the 4 cities that we just discussed. As you can see, all over the place, you see only red, huge drops in Delhi and Gurgaon. Calcutta also witnessed some volatility. Last few quarters, it's been pretty volatile in terms of going up and down by 20%. Noida is not too bad when compared to the other markets, but still down by 8%. So that's it from my side. Over to you, Aradhana.
Thanks for sharing this insightful presentation with us. Let's quickly take up the questions now. I would request Jayashree ma'am to read out the questions and their answers so that all our users may listen to your insights.
Sure, Aradhana. Thank you. Let's quickly go to the queries. Our first query is from Piyush Mehta. I am from Bhopal and my son lives in Kolkata. I want to buy him a 1 BHK. Would it have a resale value? Please suggest a suitable location. Now, Piyush, if anybody tells you to go and buy in one locality, that would not, what you buy would be different from what another person buys. I'll give you some basic tips which you can use when you buy a property. First, when you go to the website, look at you put in your requirement 1 BHK. See which are the localities that come up. Now, when we do the PropIndex, we are actually telling you where the supply is and where the demand is. This will help you to understand which are the localities that have future potential. Currently, all property markets are down, and like Uma said, while there was a euphoria after the Modi government came and we saw a temporary blip in the property market, we did not see any significant holding of that euphoria. Can anyone predict which location will give you the best return? Look at past trends, but over the last 2 years, they have been a little slow and you wouldn't be able to assess. What I would say is this: pick up the localities where you have lots of supply. Out of those, assess which are the areas which have a potential for rental returns. If there is good rental requirement, then you will understand that those are the areas where, while you hold your property for 3 years, 5 years, which typically is the period for which you should hold a property if you want good returns, in that time, you have to see what is the return that a steady rental return. After which, once the market starts going up, monitor the market. Don't jump into the market as soon as the market starts picking up. Please understand that the markets will take a little while to stabilize. We expect some action in the market in 6 to 8 months when the consumers get off the fence and start buying. That is directly a correlation of how the home loan interest rates are going to play out and how what government policies are going to come up. We would say that the budget 2015 should be a big indicator of what the government intends to do, and that should significantly impact consumer sentiment. Once that happens, then the markets start rising. But as a retail buyer, this is a good time to buy because the values have been low and continue to be low. In fact, in Kolkata, I see that there is a slight rise in prices. Let me tell you which are the localities where you have supply in your budget. In the up to 20 lakh budget, you have Thakurpukur, Joka, Barasat, Purohitpur, Amtala and Pailan. These are the areas where we have properties in this range. Do visit Magicbricks and you will be able to figure out. Also check out the rental returns, rental demand on PropIndex, and you will be able to assess which are the areas that will give you your returns. I hope I've been able to answer. If there's anything else, do write back. We'll be happy to answer your queries. Uma, you want to add something?
No, Jayashree, I think you've covered it all.
Okay. We have Jaideep Gupta who says, can I bank on Lucknow or Patna for realty gains? Please give reasons. Actually, we have noticed, Jaideep, that both Lucknow and Patna have actually been markets which have good potential. While these are not markets that we cover in PropIndex, let me quickly put it in perspective. Lucknow has a huge local drivers. It is an education-driven market, and the education institutions, typically towards Gomti Nagar and so on, have been driving a lot of demand, and many national developers are already building in that area. But there have been some instances of delays in projects. So when you buy in these areas, do some survey of your own in the market, and also be sure that you're keeping track of the developer's track record. How has he been delivering in the past? Patna is another market where there has been returns, but the rate of returns have significantly slowed over the last 1 year. A lot of people from Patna have been who had been buying in the Delhi NCR markets have started putting their money back into the Patna market. It's an active market. There's lots of supply, and there's lots of options for you to look at. Come to Magicbricks and check. I'm sure you'll be able to figure out which are the localities where you would get properties that match your budget. Uma, anything to add?
No, Jayashree, nothing to add at this point.
Okay, okay. Do feel free to jump in whenever there's something to say, right? We have Deepak Giri who says, which are the most promising growth corridors in East India? Do you think Kolkata has the potential to shed its image as lull reality? Actually, in East India, there are some markets, most of the markets are driven by their own local demand. That's because there has not been much commercial investment in the eastern markets, and therefore there has been a slow real estate market driven primarily, as I said, by the local city demand. Bhubaneswar is one market where we have seen a lot of rise over the past 4-5 years, and it is a market where the government policies has actually been in favor of planned real estate development. If you look at the corridors, the transport corridors from Bhubaneswar, you have seen a lot of national developers coming up with township projects there. You would be able to get a lot of options. But will it be fast-growing real estate market? I don't think it would be for a while till you see any new commercial investment which would drive the local demand. Let me go to Puneet Walia. Uma, this is a question for you. What is housing sentiment with respect to the real estate market? Puneet Walia asks. Would you like to explain, Uma?
Yeah, sure, Jayashree. So, Puneet, so if your question is what is housing sentiment, like I started off with during just the initial stages of the presentation, the reason we wanted to capture sentiments was that we thought it is extremely important to know what buyers think. So while see, like right now, buyers think housing markets are going to go down. So it probably means that registrations are also going to go down. So if buyers are actually going to translate their sentiments, and if macroeconomic conditions don't drastically change in the next few months, then you'll probably see registrations going down. You also probably are going to see prices coming down to some extent in some markets. At least it gives you sense of direction. So in terms of if you are an academician, if you are a policy maker, you can kind of gauge what's going to happen. Even if you're a government authority, you can kind of gauge what the actions of your policies are on sentiment. So for example, an interest rate cut is going to boost sentiment to some extent, whereas the recent guidance value changes by the state governments is brought down sentiments quite a bit, because people had to shell out a lot in terms of stamp duty and registration taxes. So each of these actions is going to have some effect on buyers, and it is important to know, while we intuitively know what it is, but as a collective population, what do buyers think? That's what we are trying to capture with sentiment, and I hope that answers your question.
Let's go to the next question. Thanks, Uma. Let's go to the next question. That's Ashish Jaiswal, who's asked a very, very important question. How do you take the Gurgaon affordable housing? Because there is lots of supply which is about to come, but the clients are dicey because government has been changed with a lot of the licenses to these developers. Now, Ashish, I can understand your concern because the Gurgaon market has actually been extremely politically driven. But let me give you the ground reality here. The affordable housing that has come up in Gurgaon is not because of any one government or any one developer. It was a concerted policy that was issued by the Haryana government, which allotted certain sectors and certain types of properties as affordable, where the developer has to build within a certain category, which is 12 to roughly about 22 lakhs would be the total unit value, and the prices cannot go up above 4,000 rupees per square foot. Also, it is targeted at end users who actually need to buy houses but do not have the wherewithal to do it. Therefore, if you buy into this project, you have to hold that project for 5 years. You are not allowed to sell off the house within 5 years. What does this do to the Gurgaon market? That is your question. One, these licenses are being given out very fast because the government does want to put in more affordable housing into the market. Therefore, these are more or less, I mean, the closest to single window clearances that you can get in the country today. However, these are being issued by many private developers. You may want to check out the track record of the developers so that you know that when you buy these houses, you are assured of a certain quality, a certain layout, a certain maintenance after you get your housing unit, and your delivery timeline. It is very important that you go visit the areas that you're looking at, because affordable housing is coming up across Gurgaon, and you will be able to see, you check out the sectors, how far it is, how convenient it is, and so on, before you invest in these. But you have also asked one more question. What happens? Will this impact the luxury segment projects by reputed developers in Gurgaon? No, Ashish. The affordable housing and luxury housing are two different categories which service two different buyer requirements. The affordable category is largely for the end users, for the young professionals who have thronged to Gurgaon for work, because it is a commercially driven market, and people who live there and want to work there and live in their own houses, as the rental values are fairly high, and it is a drain on their resources. This is the government's way of saying that if you do come to Gurgaon, stay here, buy here, and live here comfortably, and you don't need to live in urban slums because you can't afford large rental values. But the luxury housing is largely driven by the middle and higher end of professionals who work in most of the corporate houses in Gurgaon. Gurgaon has over 20 million square feet of commercial space. All the occupants of these areas, these are corporate offices, and house the senior professionals. Many of them want to walk to work or drive less to work, and they are the ones who are driving the luxury market. There is also a strong investor segment which has been driving the Gurgaon market, which is currently not very active. So these are two different segments of the market, and I don't think one will impact the other. Both are good for the market. There is robust demand for luxury housing in Gurgaon. Supply is still more than demand, but I would say that Gurgaon is the market with the most propensity to buy in the luxury segment among all the markets in the country. Uma, you want to add to that?
No, Jayashree, I think you've covered it all. Nothing more to add from my side.
Oh, let's go to the next query. Is it a good option to invest in Sector 32 Noida or to invest on the FNG Expressway? My target is 5 years from now, and I'm looking to earn rental income. What should I do? If you want rental income, please buy in those sectors that are near the commercial sectors, because that is where the maximum rental return would come. But Noida is not a market that you invest in for rental yields, because you're going to see that there's so much stock that's coming into the market. I don't see the rental markets rising for a while now. Over the next 3 to 5 years, most of the developers are going to start handing over possession. That has already started. There's roughly 35 to 40,000 houses that are in various stages of possession, close to handover, and these houses are going to impact the rental prospects of the city. However, it is going to be a very well occupied area, because we see very, very robust demand. Now, in a market where there is demand and a lot of supply coming, it will act as a magnet to a lot of end users, and that is good for the city, because then you will have more facilities, more. Already the metro has been announced across Noida and into Greater Noida. So, FNG corridor is a corridor that has not really taken off yet. There are many developers who are selling on the back of the FNG corridor, but I don't think that you should bank on that as a driver till there is work on the ground. Once you see the alignment announced, then you will be able to figure out, because actually it has a lot of potential. Faridabad, Noida, and Gurgaon are three very, very active hubs of the NCR. If these three hubs are joined by a good have good connectivity, you are going to see a lot of potential for real estate. But even the alignment is not announced yet, and I think you should hold your horses as far as the FNG corridor goes. If you think that sector has other drivers, please feel free to go and invest. which are the localities to be linked by metro network in Kolkata and its prospects. Anirban, I would suggest that the best thing you can do is to go to Kolkata Metro website, pull out the localities and see which are the localities that are going to be linked. That's not difficult to find. What you're asking is what are the prospects? It's like this. Metro always adds about 20 to 25% to the residential real estate values in every city. Whatever its value is, once the metro arrives, there will be at least a 15 to 25% rise in values, both capital as well as rental values. But you also have to see that how close are you to the metro. Within 500 meters, you have very high rise of values. 1 kilometer away from the metro, you see the rate of rise going down. If it is easily accessible to the metro stations, then you see values going up. So you see, there is no one rule of the thumb that I can give you. By and large, 15 to 25% rise in values. Check out the alignment of the Kolkata Metro, which when is it going to come up? In areas where the metro is under construction and there is a lot of construction activity that people have to contend with, and therefore traffic jams and so on, those areas do not see rise in rental value till the metro work is in the last stages, when probably during the trial runs. That's when you see rental values going up. Capital values go up maybe a year before the project is complete. If you're a buyer, please look for projects that are in metro corridors that are closer to completion. If you are looking for rent, remember that when you buy where you can afford. But when you lease property, you lease where it is most convenient for you. So keep all this in mind before you make your investment. There is Farida Dinojwala who says, do you think studio apartments will take over 1 BHK considering more usable space and better utilization of space? Farida, I think there is a huge demand for studio apartments. It's a very robust category across international markets. In India, it is just making a comeback, entering the Indian market. But I think what will happen is that studio apartments, the maintenance charges are much higher because it is completely centrally managed services. There will be an operator who manages the entire studio apartment complex. This means that your monthly maintenance values that you pay to your developer or your facilities manager will be much higher. Other 1 BHK units will have your standard monthly maintenance, and for anyone who's looking for 1 BHK because they can afford less, also remember that your monthly outflow should not be more than what you can afford. So these are the pros and cons of regular 1 BHK and studio apartments. There is Ashish Jaiswal, who has come back saying, investors are now skeptical for luxury projects because in those projects the input is very high and the output is very low. So how can the investor generate appreciation while they are already getting buyback schemes or assured returns, but still they are not confident enough? So what those investors should do with their money? Ashish, if you're buying as an investor, the more expensive the input is, the less high your output will be. The return on investment is highest for moderately priced properties and when you buy in the early stages of the development cycle. Then you will be able to exit it when the values go up. If you already buy an already expensive property, the rate of growth of the property value will be limited. And that is why investors who buy into luxury properties do their homework very carefully before they buy that. However, remember that if you're investing into luxury property as a future end user, you want to invest and get rental returns, but you want to maybe occupy it at some stage of your life, you will then be able to get best returns if you invest in those markets where there is very robust demand and not an oversupply of stock. that is when you will be able to get good value out of your luxury investments. Otherwise, if you're just looking at rate of return, I would say go for more moderately priced properties. That will give you better return.
Jayashree, if I may just add here.
Yeah, please.
So this is where your like the indexes like your PropIndex become important in terms of gauging how quickly prices have gone up. So if you look at history in the last 2 years, you can kind of gauge which markets have actually appreciated probably very highly or very quickly in the last few quarters. Those markets you're probably not going to see as much appreciation in the near future. And can even against trend, and for whatever reason have not appreciated as much. So this is where indexes like either the SSI or PropIndex give you a lot of insight into which markets you should be picking as an investor. Thanks, Jayashree.
Okay. We've got Koeli Verma who's asked, what are the future prospects of Sector 86 Noida in terms of getting developed as residential sector because there are so many industries in its vicinity? Also, what will be the return on investment considering a time frame of 2 to 3 years? Koeli, it is not an actively traded locality. We hardly have any listings. In fact, I don't think we have any listings in Magicbricks from Sector 86. It is not an active residential sector. If you're looking at will it become developed as a residential sector, unless it is actually announced, I would say you have a very short time frame of 2 to 3 years. It's not advisable to get into. You also need to check on the status of the master plan of Noida, which is available on the website. Do check it out. Then in the zoning, see if residential is a possibility here. Otherwise, don't put your money because you think there is future potential. That future potential could be very much in the future. Uma, you want to say something?
No, not really.
Okay. I have Gauri Dina who says, is it safe to buy property in Haryana, affordable scheme at Gurgaon? Gauri, I would say it looks reasonably safe. There are many government checks and balances, and the developers are answerable to the government. Therefore, the value will not go up above 4,000 rupees per square foot. The developers, because they have launched at lower rates and have got their approvals fast, they want to deliver fast and get on to the next project, because this is the market where there is very active growth. If you look at developers such as Supertech, for instance, they have already established a prefabricating plant in Greater Noida, which will service their affordable housing segment. Prefab construction is very fast, very quick, and they are promising deliveries. Soon we will see more and more developers launching projects, completing fast, and then launching the next segment, because clearly in affordable housing, since the ticket sizes are small, developers only make money out of the volumes and not out of overcharging the consumer. And timely delivery is very important in the segment, and I think the government will be pushing for it. So if you're asking is it safe to buy in these projects, I would consider it reasonably safe. Do check out the track record of the developer and what kind of construction they are promising. Check out the specifications. Also go and do a physical verification of where this is coming up, so that it is not in some boondocks where you don't have any infrastructure available, that it should be in good sectors that are livable, because the project will be delivered faster, and therefore you can't wait for infrastructure to come. You can't wait for a long time for infrastructure to come. I hope I've answered your query. If there's anything more, you can call me back. Okay, which location is better, Rajarhat Chaumata or Hathiara near Jayangra, Bagurki, for better resale value in the future? Rajarhat is the area where there is a huge volume of properties coming up. Today, capital values are between 3,100 to 4,000 and odd. In Bagurki, you have 2,900 to about 3,600. Rajarhat is relatively more better potential, because there is a lot of demand. However, there is also a lot of supply. So what you're saying is, in the future, better resale value, which one will you get? I would say go check on the developer. The best resale value comes out of which developer you're investing with. Where is the maximum demand? Rajarhat has good demand. Bhaguti is more of a residential area. And it is also among the, both these localities are among our preferred locality, top 10 preferred localities. Rajarhat is number 1, Bhaguti is about number 8. Therefore, I don't think you should bother about whether it will have a resale value. Of course, it will, because there are lots of buyers who want to look for that properties in those areas. Let me go to Tara Prasad, who says, I want to buy a 1 BHK apartment for investment purpose only. Where can I shell out 10,000 rupees per month? Delhi NCR is where I want to buy. Please, can you suggest something for me? Tara, there are two things that you have to consider here. In Gurgaon, there is an affordable housing policy, and a lot of developers are coming up with projects. So you may be able to afford in the Gurgaon market. Check out the projects and buy. There are also affordable housing 1 BHK projects across Delhi in areas such as Uttam Nagar, Chhatarpur, Mehrauli, and so on. But here you will have to be very careful with the land titles. You will have to get somebody to check out the titles. Check backwards for at least 30 years, so that you know that you're not getting stuck into a project which has legal issues, and where there is other claimants who will then put a legal start legal issues for you. I would say go with developers where you know that these are new projects, where there is a stamp of approval from the authority. That should be safer for you. Ashish Jaiswal is asking the 4th question of the afternoon. He wants to know, that was the reason I asked, what will the affordable housing will take the place of luxury projects, because the small ticket size apartment will always give us best return in percentage rather than the luxury one. So how the investor should take their investment decisions in this situation, while the most of the affordable housing has been allotted to the new sectors, which have been added as A or B sectors of Gurgaon, and those locations will take a long time to get habitation. Ashish, there is also thing that you should consider. Affordable housing is not meant for the investor. It is meant for the end user. So if you as an investor are coming in, remember that you will have to hold your investment for 5 years. And in that 5 years, at least 3 to 4 years will be while it is being constructed. The values will not go up significantly above 4,000, because these will remain affordable for some time. Therefore, don't get into affordable housing buying many units because it is affordable and you can buy 4 or 5 units or 2 units or whatever. Look for projects where you can get a good return on your investment. The reason why the Gurgaon market is slow is because consumers have quickly figured out that in 50, 60, 70 lakhs, there's hardly any property that you're able to get. That is where you can invest and you can get good returns, because your entry values are low. Luxury properties don't give you very high rate of return, and that is why the Gurgaon market is slow, because it has affordable housing on one end and luxury on the other, and hardly anything in the middle. Luxury is already oversupplied. There's more supply than demand. Affordable is something that is selling well, but it is selling to end users, people who want to buy and stay in their own houses. So I don't think it is the best market for investors to get into at this point of time. I've got Tara Prasad who says, I want to buy one, I'm sorry. There is Jatin Hari who says, is Gurgaon also moving in for 2 BHK? Can you tell me about some of the potential localities that can fetch good returns? Jatin, there are 2 parts of Gurgaon where there were 2 BHKs being launched. One was the Dwarka Expressway, where some amount of 2 BHK units were launched, and the other one is the Greater Gurgaon area, which is the Sona, the 30-31 sectors of Sona, which have been master planned recently, and these have to be the infrastructure facilities have yet to come in. The Sona region is going to take a good 3-4 years before it will be livable, because even now it is at the planning stage and the final master plan has not been launched, even though the sectors have been launched. A lot of developers have started selling projects in the Sona region, even in the 2-3 BHKs, and this is roughly in the 4,500 to 5,500 ranges. These abut the affordable housing segments, but there are some developers who are not in the affordable in the segments in the sectors that have been allotted to affordable housing. This is where you'll get 2 BHK, but by and large, Gurgaon is undersupplied in terms of 2 BHKs. Most of the developers and the market, even in cooperative group housing, have been favoring 3 BHK rather than 2 BHK. There is Pallavi Gupta who says, I want to buy a 2 BHK flat in Kolkata under rupees 20 lakh. Which area will be the best according to connectivity, children's education and security? Pallavi, I think there are 2 things you should do here. One, go to Magicbricks, put your requirements. There will be many options that come to you, and you check out which one suits you best. There is a section in our advice.magicbricks.com where we analyze the localities in terms of the ATMs, the schools, the hospitals, the entertainment and retail infrastructure and so on, and we allow users to rate it. So it is a crowdsourced rating mechanism, and a lot of consumers have been rating different localities. Once you've shortlisted the localities where you can get your properties, please go to advice.magicbricks.com, go to localities and check out what others are saying about the localities. Ultimately, I firmly believe that the people who actually stay there or work in that locality are best equipped to tell you how that locality functions for an end user. That is what you should be looking at, and we give you information such as what are the schools available there, what are the other infrastructure facilities available there. Aradhna, I think we'll take the last question of the afternoon.
Of course you can.
I've got Ashish Jaiswal back. How do you take the Sona market prospect in comparison to the affordable housing in Gurgaon? Because both the markets are getting responses being into low category segment. So which one is the best option to opt for? Affordable housing, Sona also is part of the affordable housing segment. In fact, many sectors of Sona have been reserved for affordable housing. So you're going to see a lot of affordable housing in the Sona sector. That, in addition, there are some developers who have land parcels in other sectors, and since this is they're getting quick approvals, there is a huge demand for it. They're developing across Gurgaon too. So when you say where should I buy, I think the Sona market has future prospects. 5 to 7 years at least, because right now it is in the planning and in infrastructure planning stage. So if you are investing in the Sona market, you do tend to enter at lower values, and you will see demand peaking in about 5-6 years. Thank you so much for joining in. Thanks Uma, thanks Aradhna, and keep those questions coming. We'd be happy to answer as many questions as you have. Do post your queries on openhouse.magicbricks.com, and we'll get back to you at the earliest. Thanks, Aradhna.
And I'm really thankful to our guest speakers
Thanks,
today for conducting this informative webinar with us. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you all for joining us today. Thank you, Jayashree. Thank you, Uma, for taking time out and having us. I hope you have a great evening ahead.
Thank you. Bye-bye.
Thank you.
Thank you. Bye-bye.